I really think the future is in East Asia. We're headed towards something I call the Greater Depression. It's been inevitable for years. The U.S. is a little bit like a giant dinosaur in its death throes. It's thrashing around. It's very dangerous. They're in a bubble.
I'm pleased to welcome back to the show Doug Casey, author of The International Man, which you can find online, and best-selling author of Crisis Investing, and also now the founder of Crisis Investing newsletter. You can check out his work. Links down below. Doug, welcome back to the show. It's always good to see you. I want to get your take on the future of the commodity complex, what you think might happen now with Iran and the US, what might the oil price do to inflation expectations, how we could expect the Federal Reserve to react tomorrow. We're speaking right ahead of the FOMC. And I'll visit some of your interesting articles that you put out recently on the International Man around the bond market. So welcome back, Doug. Good to see you.
Okay, well, it's good to see you and to see Vancouver from a distance. Yes. Anyway. As we were talking, I used to live there for years, and I love Vancouver. But in any event, commodity markets. What's really interesting now is what's happening in the energy complex, oil and gas. And with the destruction of production facilities, refining facilities, the fact that very little oil is going out through the Straits of Hormuz and through the Bab el-Mandab due to the recent actions of the Houthis, you'd think that we'd be in a howling commodity market for oil. You'd think that it would be 120, 130, 150. But it's not. It's down like $3 or $4 today, and it was down yesterday. So to me, this is actually inexplicable. And not just to me, but I haven't talked to anybody, even guys that really know the oil market as specialists, that have a good explanation for, everybody can take a guess. Why is oil not running away at this point? So that's my big question, and I don't really have an answer. But I'll say this. I don't think there's any reason to believe that the problems between Iran and the U.S., or I should say Iran, Israel, and the U.S., because Israel is actually at the root of this problem. You're not supposed to say that, I realize, but it's just another country. And that's not going away. So I remain bullish on oil, although I'm playing it with oil stocks, not really in the futures market.
Oil has always been an extremely volatile market, but even more so now. I believe the reason that oil is down, despite the Bab el-Mandab Strait now being threatened to be closed by the Houthis, is the fact that we have this headline here: U.S.-Iran temporarily pauses fighting. Okay, and a temporary break in hostilities between the two countries appeared to hold on Monday, even as Tehran denied media reports that it had agreed to a 10-day ceasefire. Oil prices fell sharply on Monday. Trump insisted the U.S. has plenty of ordnance. We have a lot of ammunition, different types. Trump also cast blame on former President Joe Biden, saying his predecessor gave a lot to Ukraine. Okay, there's been concerns of dwindling stockpiles of ammunition. There's also separately concerns of dwindling stockpiles of the US SPR, which is reaching a critically low level. But that's separate from the story that we're reading now. Meanwhile, the Dow is rallying 600 points. Earnings are pushing stocks higher while seemingly ignoring the tensions in the Middle East. So to answer your point, I believe that oil is down today and yesterday because there is a belief of a new peace talk. Now, as we speak right now on the 28th Tuesday, there is no peace agreed yet. So there is an expectation of perhaps a peace talk after some hostilities have been ceased. Who knows what's going to happen next? It could shoot up to $90 again tomorrow.
Well, reading or listening to the news is an exercise in futility. Somebody did a count of the number of times that Trump has said, it's all over, peace is here, the Iranians have caved in, blah, blah, blah. And I think the last count of somebody that did this was 39 times. So this is like, for those of you who might have read Peanuts when it was published, this is like Lucy pulling the football on Linus again and again, and Linus never learns. And I've got to say that I'm not a supporter of the Iranian regime, or that's not an issue. What I'm saying in this case is that the Trump regime launched a surprise attack, a Pearl Harbor type attack on Iran with the Israelis, how many months ago that was. And it basically amounts to a war crime in that it happened during peace negotiations. I mean, it's dishonorable. I don't think the Iranians can forgive this at this point. And there are estimates that the U.S. and Israel have done, well, who knows? Because you can't really believe anything in the news. Both sides lie promiscuously. But they say $300 billion of damage have been done in Iran. And I would expect that the Iranians want that money back from somebody. Well, they're planning on getting it back by charging tolls on people going through the Straits of Hormuz. But no, this isn't going to end because Trump is very pig-headed and he's punched the tar baby and he can't withdraw his fist at this point without looking like a fool. So this is going to go on. I mean, these two regimes.
What options?
What options are there?
Yeah, what options do the Americans have to off-ramp? Yes.
Yeah, the only intelligent option is that the U.S. withdraws from the Middle East. Why, you might ask yourself, does the U.S. have about, and nobody knows, maybe they don't even know, 800 bases, various places in the world? I mean, this is provocative. It's not winning friends and influencing people. It's intimidating people and trying to scare them and threatening them, which Trump loves to do. What he's done with the Iranians, threatening to, what amounted to launch a nuclear strike on them.
Could I offer a theory to your question?
That's the way you solve this. Is the way the Vietnam problem should have been solved early on. You put the troops on the boats, you put the boats in reverse, and you go home and say, "Hey, I'm sorry, we made a mistake." But no, he's not going to do that.
One thing I've learned from talking to countless investors over the years is that people spend a lot of time searching for certainty, the perfect signal, the perfect entry point, the perfect moment to act. But markets rarely work that way. In fact, many of the smartest investors I've interviewed weren't successful because they waited for certainty or the perfect entry point. They were successful because they acted when they had conviction. And that's especially true when it comes to something like gold. Many people have followed the gold story for years. They understand the macroeconomic backdrop. They see why central banks continue to accumulate gold, and they understand the concerns surrounding government debt, deficits, and currency debasement. But understanding an investment thesis and actually positioning for it are two very different things. Today, more investors are deciding to take a closer look. Some are purchasing gold directly. Others are moving a portion of an IRA or a 401k into a gold IRA. That's why today I partner with Augusta Precious Metals. What I appreciate about Augusta is their commitment to education. They explain how their process works, answer your questions, and help you evaluate whether or not precious metals make sense for your particular set of goals and situations. No pressure, no hard sell, just information so you can make an informed decision. So if you'd like to learn more, visit lintrustsgold.com, link down below in the description, or scan the QR code here, or text LIN, L-I-N, to 35052 to receive Augusta's free information guide. The answer to your question may lie in the heart of why the U.S. has attacked Iran in the first place. I'm just offering a theory here that the U.S. has 800 bases around the world because it has a security defense apparatus in place for allies, meaning there are bases to assure allies that they have protection from American forces. Thereby, the U.S. has better trade deals, and Americans are better off with these deals that are more favorable to the United States, let's say. Is that true?
No, I don't think it's true because the military budget of the U.S. is $1 trillion, and Trump is trying to raise it to $1.5 trillion. So it's actually bankrupting the U.S., which is not helping the U.S. at all. The purpose of a military in a civil society is to defend it from attack. And having 800 provocative bases all over the world is not defending it from attack. They're acting as missile magnets right now. And anyway, I think the U.S. has proven that, just as the U.S. really can't be conquered in any conventional kind of way, how are you going to invade the U.S.? I don't see how it could be done. Same is true of Iran. I mean, if the U.S. could not conquer a small, poor country like Vietnam, it's not going to be able to conquer Iran either. So what's it doing there? What's it hope to accomplish? Well, this is all about the Israelis, because the Israelis have seen Syria go away. They've seen Iraq go away. The U.S. is paying the Egyptians $4 billion plus per year to act as the Israelis' BFF. So they'd like to get rid of Iran too. And at that point, Israel would basically run the Middle East. But the U.S. doesn't have any interest there. It has zero interest there, actually.
Well, perhaps they were seeking a regime change in Iran and they couldn't accomplish that. I'd like to turn back to the market.
And they won't. They won't. I mean, it's a fool's errand, a very costly one.
Are you expecting then higher oil prices to stay, meaning higher inflation expectations, meaning higher Fed funds rates?
Well, let's look at the production costs of oil. And it's hard to put your finger on it because depending on where the oil is, what kind of a deposit it is, what the political situation is, it's hard to put your finger on what the marginal cost of bringing up a barrel of oil is, depending on all these things. But I'd say in the $80 area, yeah, I think it's at a new equilibrium point, all things considered. And from here, as the political situation gets worse, because along with gold, oil is the most political commodity in the world, I think it's going higher. So answer is, I remain bullish. How am I playing it? By owning oil and gas stocks, but not ones that are in the Middle East.
Somebody brought this up to my attention. If a developing country, we're not going to call you a third world country, but if a developing country could basically stop a naval superpower with drones and cheap missiles, relatively cheap, where the U.S. has to expend a disproportionately large amount of money to achieve the same results. What does that tell you about how capital is going to flow and where power is headed in the next 20 years?
Tells me that most of the money that the U.S. is spending on the military, and it's well known, the U.S. spends more than the next 10 countries combined. It's basically wasted. The stuff that we're buying, like aircraft carriers, they're basically the equivalent of battleships before World War II, or cavalry before World War I. That's what carriers are today. And the same can be said of new fighter aircraft like the F-35, and they're developing a new one. I think it's called the F-47. The wave of the future is drones, both in large fighter type aircraft and small battlefield type infantry type things. This is being proven on the front between the Ukrainians and the Russians. So the U.S. is making mistakes everywhere and bankrupting itself and the people of the country in the process.
I believe we've had a conversation about the necessity of war in the past. And correct me if I'm wrong, but let me just get this. It's been said for a long time that war is the health of the state. And when any war is fought, the government grows, is something you said when you were on with me last April, a couple months ago. So, given that statement, first of all, do you still agree with that general philosophy a few months after the fact? But if you do, then what does this war leave behind once it ends?
Other than a lot of dead bodies, a lot of unhappy people, a lot of destroyed industrial capacity, a lot of debt. It's going to leave behind a growth in agencies of the state. The military will become more important. The CIA will become more important. So war is, look, this is not a defensive war. It's a war of aggression. It's optional, totally optional. I hope that Trump is prosecuted for war crimes. Quite frankly, it's absolutely shameful. It runs counter to all the reasons why, in the past, people have loved the idea of America. But the idea of America is being destroyed right before our very eyes. It's devolving into just another of 200 nation states. I mean, bigger, wealthier, stronger, yeah. But it's a declining empire. And it's actually turned into a domestic empire. It wasn't so long ago, actually, up until the early 70s, that the U.S. was a cohesive entity, culturally, religious-wise, language-wise. It was actually a real nation state. Now it's become more of a domestic empire. I mean, with large numbers of people, with everything's alien, and they're in the U.S. collecting benefits, which is drawing in the wrong kind of people. I'm not against immigration, incidentally. I'm all for immigration. But in the past, the U.S. and Canada, for that matter, used to get the best kind of people coming. They may have been penniless, but they were opportunity seeking, and nobody gave them a free ride. This is not the way it is in the U.S., Canada, or for that matter, Europe.
Well, I'd like to understand how the world is going to change now that we have this revelation that a militia with relatively, I would say, I wouldn't say ineffective, but they're relatively primitive weapons compared to what the U.S. and other superpowers possess. The Houthis have blockaded the Bab el-Mandeb Strait, which is the strait northwest of the Strait of Hormuz that leads into the Suez Canal. So that choke point is important for oil going into Europe. Now, if the world now realizes major choke points can be blocked off by militias, how are they going to adapt to this reality?
Yeah, it's an interesting point because the Houthis, of course, live in Yemen, but they are a rebel group within Yemen. So it's amazing that a group that doesn't actually theoretically control its own country is able to do all this damage. And when you look at the cost, which you alluded to, of American missiles, if memory serves, a Patriot missile costs about $5 million in hardware, not counting other costs for launching it. A Tomahawk costs about $3 million. These are very, very expensive pieces of equipment that take a long time to build. Meanwhile, the Houthis are using cheap drones. I mean, and we're talking about the drones. What is that drone that the Iranians have become famous for building? It has a delta wing, the Shahid, I think it's called. Estimates are that they can produce those for as little as $30,000 a piece. And when something is that cheap, you can build lots of them. And at some point, I think the Americans can look forward to a massive flight of those and cheap missiles attacking their aircraft carriers offshore, which is one reason why aircraft carriers are staying far away from the Iranian shore at this point. So military technology is changing right before our very eyes. And of course, we've all seen what robots are able to do, the demonstrations that the Chinese, and there are scores of Chinese companies manufacturing and playing with robots today. I mean, they're absolutely magical what they can do. Run marathons, they can fight, they can, and they're improving at a parabolic pace, along with artificial intelligence. So it's very clear that life is actually starting to imitate art. It always has, and we will be living in the world of the Terminator soon.
If you were an American ally in the Pacific or even in Europe, and you're looking at the situation, which is the fact that the Strait of Hormuz and to some extent the Bab el-Mandeb Strait cannot be opened or kept open by American naval forces, how would you be reevaluating your partnership, or would you consider that a factor at all?
Well, if I was running a country, I would not want to be allied with the U.S. or, for that matter, with China. Because what did Henry Kissinger say? I'm trying to remember his exact quote, because he was absolutely right. He said that the only thing worse than being an enemy of the U.S. is being an ally of the U.S. And I think he's quite correct. I mean, nobody wants to be dominated and told what to do and act as a puppet of a larger power, especially when it's declining. You know, I'm afraid that the U.S. is a little bit like a giant dinosaur in its death throes. It's thrashing around. It's very dangerous, but it's on the slippery slope. I really think the future is in East Asia, unless the U.S. radically changes course, and it could. It could. I mean, it could. What would I do if I was the U.S.? I would probably default on the national debt. What? How can you say such a thing?
Yeah, we're going to get to that in just a minute, the debt situation. But finishing off here, you've predicted the Iranians can't back down and Trump is at an impasse. Are we then, as investors, factoring in a permanent war premium on oil, meaning that we can expect ships going through the straits to pay a fee? I was told $1 to $2 million per tanker, which is a relatively inconsequential cost for oil tankers companies, but nonetheless has to be factored into the global price.
Yeah, I figure the average tanker transports in between 1 and 3 million barrels of oil in its holds. Oil at $80 a barrel. I mean, $1 million is a fairly trivial expense. Hard to believe, but true. I think that war in that part of the world is basically a permanent feature at this point.
Well, on the debt issue you mentioned earlier, you have an article here on the International Man that I like to bring up. The 5% line in the sand, the treasury yield that could break the fiat system. So the core of this article, I'll highlight for the audience here, that at today's debt levels, every 1 basis point increase in the government's average borrowing cost adds roughly $3.9 billion in annual interest expense. So a 68 basis point rise is not trivial. It translates to nearly $265 billion in additional yearly interest costs, materially widening a budget deficit that was already around $1.8 trillion. Yeah, I mean, there's different maturities for these treasuries, but your point stands. If the interest rate rises, the cost would eventually have to be higher. Are you? The interest rate has been rising for quite a number of years now, though. Doug, why 5% here? Why is 5% the line in the sand?
Well, interest rates went down from the early 1980s when the U.S. government was paying 15 to 18% for money to just about zero in 2022. And they've been going up since then. And the interesting thing is that Most of that U.S. government debt, it's not long-term debt. It's not 30-year or even 10-year debt. It's shorter than that, which is why there's about $15 trillion of U.S. government debt out of the 40 trillion in question that has to be rolled over in the next 12 months. And the question is, to whom? The Chinese and the Japanese aren't going to buy it. Most foreign governments don't want to hold a fiat currency, a hot potato, in the form of a U.S. government, because most of that debt is going to wind up being financed by the Federal Reserve. And a 30-second refresher course, the way it goes, when the U.S. government runs a $2 trillion deficit, which it is right now, it basically has to sell that to the Federal Reserve with all the other debt that has to be rolled over. You have to find some buyers somewhere for it. So when that money is sold to the when the Federal Reserve buys U.S. government debt, it literally creates Federal Reserve notes and credits the U.S. government at commercial banks, Chase or whatever. So that's how the deficit of the U.S. government is monetized. And then once it gets into the banking system, because the banking system is fractional reserve, the banks can lend that out several times. And that's the root of inflation, which is a monetary phenomenon. It's not the fault of the butcher or the baker. Could punish the people that have been codependent with the U.S. government and default on the debt. It's going to be defaulted on eventually, either by outright default or more likely by inflating it out of existence slowly. Military spending should be cut back at least 75% to start with. Welfare should be abolished. Most of the U.S. government's physical assets should be sold off. There are a lot of things that could be done to solve the problem, but none of them will be done. The situation's getting worse, not better. I hate to sound so bearish, David, but I frankly don't see any way out. I see we're at the edge of a precipice at this point.
What does this edge of the precipice look like? What does that mean?
Well, yeah. What is going to happen? One of the big problems that we're facing is the amount of debt in the world generally. I mean, we've talked about the debt of the U.S. government. States, municipalities have a lot of debt, but individuals as well. There's about $1.5 trillion of debt for financing college loans. Okay, $1.5 trillion, and that can't be dismissed in bankruptcy. Those people that borrowed for their worthless college educations, most of them are worthless, not all of them, are going to have to pay it back. It's like an albatross around their neck. There's about the same amount, $1.5 trillion, of debt financing automobiles as well. The problem with debt is that you're either borrowing the saved capital of people who've built that capital in the past. You're borrowing it, or you're mortgaging your personal future. And most of the debt that we see in the U.S. today is not productive debt being borrowed to build things, but it's consumer debt. That's what education debt and automotive debt are primarily. And there's a lot of medical debt too, I've got to point out. And that's also consumer debt, if you would. It doesn't produce any new wealth. And we can argue, yeah, you need it, but so I think it could all come to an end. Listen, if you and I borrowed $1 million today, we could live really high off the hog for the next year, but a year later we'd have to pay it back with interest, and our standard of living would drop substantially as we tried to do it. And that's the condition that most of the West is in, not just the U.S. actually.
What is the fundamental difference between us borrowing money and the government borrowing money that they can't pay back?
Well, almost all government debt is consumer debt. In other words, very little of it goes to create new things, build new technologies. It's if you look at the U.S. government's budget, you'll find that the biggest items are Social Security, Medicaid, Medicare, the military, and servicing of debt. Those things, what is that, 5 things, add up to about 90% of all government spending. The other 10%, yeah, they throw some money for research here, developing new things there, but it's a trivial amount of the budget. It's mostly Medicaid, Medicare, Social Security, the military, and interest. So it's not productive debt. We've been living above our means, and I think we're headed towards something I call the Greater Depression. It's been inevitable for years. I mean, you could see this coming since the 1960s, but it's going to result in a significantly lower standard of living for the average American and Canadian. I think Canada's even in worse shape than the U.S., although I don't have the numbers in front of me. And Europe's worse shape than either of them.
We're speaking ahead of the one day ahead of the FOMC conference here on Tuesday. In this article, the author writes, "If I am right, rising treasury yields are only the beginning. Record debt, money printing, and growing political and social instability could create extraordinary volatility. Serious consequences for your wealth and personal freedom." Further, the author writes, "I think there is an excellent chance that the Fed will be forced to engage in yield curve control, either implicitly or explicitly, and cap long-term yields." How will that translate to monetary policy this year?
Well, poor Kevin Warsh. What's he going to do? He has no alternative but to if he try. First of all, I hasten to say that I don't believe the Fed should exist, which the thought shocks people because a lot of people think that central banks are part of the cosmic firmament, but they're not. They're a fairly recent innovation, as a matter of fact. But what's he going to do? If he raises interest rates too high, a lot of people aren't going to be able to crack the nut and will default. And then you got a problem, a daisy chain. One company, one person defaults, the next defaults, so next defaults because everybody seems to owe everybody else. On the other hand, if he lowers interest rates, prints more money, encourages more borrowing, maybe he can kick the can down the road for a little while. So he's caught between Scylla and Charybdis, a metaphor that more people have learned since the recent success of the movie Odysseus.
Are you expecting anything to compel the Federal Reserve to keep rates the same this year? In other words, the expectation that the Fed will hike rates, which is really rather baked into the bond market right now. Could anything change that?
Well, the long-term bond market is one thing, and what the Fed can do with short-term interest rates is something else. So I expect that nobody, or less and less people, are going to want to lend the U.S. government for money for 10 years or 30 years at a fixed interest rate when the dollar is being inflated out of existence, and actual inflation. I mean, the government has its own numbers, that they come up with. But it seems to me that prices are rising upwards of 5% per year, maybe more. So it's very hard to figure out how you're going to juggle these things, because remember, the Fed doesn't create anything at all. All it does is manipulate numbers with paper money. So all these thousands of economists, and it does have thousands of PhD economists running around, most of them serve no useful purpose.
Let's talk about which commodities you still prefer right now. At $4,000 gold, is gold a buying opportunity, or is in the middle of a further breakdown here?
I've been a gold buyer since 1971. That's the truth. I read a book by Harry Brown, who used to live in Vancouver, incidentally, called You Can Profit from the Coming Devaluation. It's still worth reading today, and it explained clearly and accurately the problem with the monetary system and how inflation works and all this type of thing. So I've been buying gold for a long time, never sold any of it. So I've got plenty of gold. The problem with gold right now is this. Back in 1971, before August, when they so-called raised the price of gold, it was $35 an ounce. It was obviously artificially cheap. It was a no-lose, high-potential speculation, as it turned out to be, since it's gone about, 1,200 times? Yeah, let's see. Yeah, 120 times in price upwards since then. The problem is that for many years, decades, gold was a one-way street. It was clearly underpriced. Now, at $4,000, it seems to me that it's more or less, relative to houses, cars, clothing, food, about where it should be, okay, relative to these other things. So I don't think gold is a particularly good speculation anymore. Same is true of silver. $60, it's not the same investment as it was 20 years ago at $4 or $5, which is where it was. So I'm treating them differently. They're great assets to own. People should own them, buy them. But if you're looking for a high potential reward for your invested dollars, I think you got to go for the gold and silver stocks. And for that matter, the oil stocks, all three of them are really cheap right now. In fact,
are they cheap for a reason? Someone told me they're cheap for a reason.
Yeah, I can understand that argument. I mean, look, I've been involved in these mining stocks for most of my adult life, and it's a crappy business. All your money is up front. To start with, you spend millions of dollars going on an Easter egg hunt in the middle of nowhere looking for a deposit. And if you find a deposit, you probably won't. That's only when your trouble really starts. Then you got to spend tens of millions developing it. And then, God forbid, it turns out to be economic. And you build a mine, which is going to cost you hundreds of millions, maybe billions. At that point, the government is going to treat you as a milk cow. NGOs will treat you as a milk cow. Native groups will do the same. It's a terrible business. Huge capital expenses. But right now, okay, all that said, I understand that stuff. But right now, as we speak, the cost of mining gold industry-wide is something like $1,700, so-called all-in sustaining costs, from soup to nuts, including closing the mine up 20 years later. So $1,700 is the cost of mining an ounce of gold. You can sell it for $4,000. Gold mining companies are coining money right now. Very unusual. It's gone from being a marginal business but it's not recognized by the market. And there are reasons why the institutions and the general public is not interested in mining stocks. I am. I'm greatly overweight mining companies and energy companies. I'm not overweight. In fact, I don't own any of artificial intelligence or computer or software companies or any of that stuff. They're in a bubble.
You don't believe in what they do, or because you think it's a bubble?
Oh, it's a bubble. I certainly believe in what they do. I think that artificial intelligence is changing the world around us. I mean, it's super important, and it's just starting. I mean, the power of computation and what it covers is increasing hyperbolically at this point. And the cat will really be out of the bag once it cracks the practical codes of nanotechnology, which is the next step that artificial intelligence will lead us to. So, no, I'm a technophile. I like these things. I believe in them. But at the same time, they're extremely dangerous. I question, I mean, people argue about this. Are these machines actually going to think for themselves and become sentient living beings? I'm inclined to think the answer is yes. Just because we've evolved over billions of years from amoeba and bacteria to, intelligent mammals, perhaps that worked with carbon, biological carbon. But perhaps the same thing is happening before our very eyes with silicon and computing. I mean, we don't know yet, but the trend is in motion.
Yes, if 25 years ago the rise of China was the dominant theme for base metals and copper, I'm putting copper in the category of base metals here, what would be the beneficiary of the dominant theme today, which is the rise of AI, the build out of hyperscalers and data centers? Which commodities would benefit from this super trend?
Well, the ability to analyze data. There's lots and lots of data that's been logged over the years by geologists in many different ways. But there's so much of it. And figuring out the relations between the myriad amount of inputs available in geology and geological deposits, artificial intelligence is actually making it possible to figure things out much better and much more quickly and accurately than in the past. So I think we're going to see more production of metals because it's not just a question. Look, it's not just a question of a couple of prospectors and a mule with a pickaxe wandering around looking to find the treasure of Sierra Madre. It's way, way different from that now. And so AI is relating that way to the mining business and geology. But that's not to say that AI, and especially the AI stocks, I think they're in a bubble. Whenever you have... No, I was just going to say, we've got hundreds of billions, maybe trillions, that are flowing into these data centers, okay? And whenever that much money flows into one area so quickly, there are inevitably mistakes that are made. And I even question, what are these data centers doing, okay? They're not making breakthroughs in science, technology, engineering, math, medicine. That's not what they're doing mainly. They're mainly gathering information about people. And I don't like that from a philosophical point of view, but I think it's going to turn out to be uneconomic. I mean, a dollar put into AI, it's not going to generate any dollars. In fact, it might all die and go to money heaven. A lot of it's going to be wasted.
The bottom line now, do you think that there still exists an opportunity in the commodity space, given that people are calling precious metals a bear market right now, perhaps more headwinds to come from higher interest rates, given that oil is already near all-time highs, copper is already all-time highs, they're expensive by historical standards, and precious metals have been on a decline. What then is the opportunity presently?
Yeah, sure. Yeah, they run up a lot. As I said, especially gold and silver run up a lot. And oil has run up a lot. But you've got to deflate these numbers, put them in terms of constant dollars. And so they're really not that expensive. And you've got to also recall that these are the raw materials of civilization. Everything that's built is either mined or grown, one or the other. if civilization is going to continue advancing, you're going to need more of all of these important metals. So this doesn't bother me. And the fluctuations in prices, like gold ran up to what, $5,500 an ounce back in what, 6 months ago or whatever it was, and it's backed off. Okay. I mean, there have been a number of times in the long bull market since 1971 of gold where it's dropped 50%. And I think the situation today, the monetary situation, is more explosive, more dangerous than it's ever been in the last 50 years. So I'm not too worried. I remain an unrepentant bull, David.
Very good. Thank you, Doug. I'd like to learn more from you and your work. Where do I go?
Well, I have a daily blog at internationalman.com where not just me, but a bunch of other guys, including David Stockman, who many will have heard of, we write there. It's free. I have a podcast on YouTube with Matt Smith called Doug Casey's Take. In the mining business, we have another podcast with a dozen or so mining experts that analyze a company every week or so called expertsroundtable.com. And what else do we have? We have a paid newsletter. All those things are free, called crisisinvesting.com. And of course, my last book, God, I'm giving you too long a list. It's called The Preparation, which is why a young man should not go to college and what he should do instead with those 4 years of time. And of course, I have 3 novels that are all very good.
Would you considering revising or updating or adding an addendum to your book, The Preparation, in the AI age? I'd be curious to see how you would perceive the rise of AI to influence education. I'm curious to get your update in a couple of years. Would you consider doing that?
Oh, yeah, because AI is going to have a huge influence and is having a huge influence on the viability of conventional education.
I read somewhere, someone influential, I can't remember who, said, knowledge is now a commodity, meaning you're not really special just because you know something, because anybody can access whatever you know through AI. And so then you become specialized only if you know how to use that knowledge. Yeah.
Yeah, no, that's true. But at the same time, if an understanding of how the world works isn't in your own brain, the AI won't mean that much to you. So it's a double-edged sword. One thing that AI is doing is that, most kids, if they're going to write a term paper today, I don't care if they're in grade school or college, are going to use AI, which means they're not particularly using the reasoning of their own brain. It's kind of cheating. And as their teachers will tell, well, you're cheating yourself. Yeah, that's true. So, but the knowledge is, the answers are there, but the critical reasoning is not there from using AI, and that's the problem. If individuals don't learn how to use critical reasoning and use it consistently in their daily life, they're on a slippery slope, and AI can't solve that. But as I said, I think that AI combined with robots are basically going to take over things in the future. They may, like I said, there may be another life form. And anyway, that trivializes everything we've been saying so far, if that's true, and it may be true.
All right, thank you, Doug. We'll put the links down below, so please do follow Doug's work. And we'll have Doug back on again soon to go over the world events and the changing world order. Appreciate your time, Doug.
Pleasure talking to you, David.
Now, thank you for watching. Please do subscribe, like this video, and follow Doug's work. Link down below.